the so-called crypto winter last year, and most of it began with the drop in the price of some of the underlying digital assets, Bitcoin being sort of the primary reference point. Many of the participants in the space were all interconnected in some way or another, whether through borrowing from one or lending to one of the other. And so as the price of the digital assets deteriorated and some of those digital assets were used as posted collateral, you saw this sort of massive unwind, if you will. And it's not just Celsius, but obviously many other participants in the digital asset space have experienced their own demise, and that has still not completely flushed itself out. As we're seeing in the news this week, a lender, Silvergate, right, which has announced its own difficulties, which is yet another participant that's having some financial difficulties. And I still think there are others to come, but Celsius was a platform for people to either deposit or use as a custody platform or earn rewards or borrow against their own digital assets. And that platform got caught up in some of the struggles you're hearing from many of the other participants in this marketplace. So a real challenge to fix this unwind. But there is now, if you go to that link that you're going to post, a plan of reorganization that's been summarized in a term sheet that's on record in the bankruptcy proceeding. So there's a vision, at least at the present time, for how to restructure or reorganize Celsius. And unlike what's going on in Voyager, which also has a plan that's gotten a lot of attention this week, which is simply transferring its platform to Binance, we're doing something different, which is actually reorganizing the company. There will be if you will, a new company that will have once been Celsius.
Well,
I think the name Celsius will be relegated to what its general term is, which is a measurement of temperature. I think there'll be a new name. I think there will be a new branding name. That there are still brackets around what that name is, and in fact, some of the participants, at least in the Twitter world, have had polls about what the new name of the company should be. That's just to be determined. There's lots of information about how it's proposed to be restructured. There's digital assets that are liquid. There's digital assets that are illiquid. There are investments on the platform that are liquid, and there are investments on the platform that are illiquid. And there's also some ancillary businesses, including a Bitcoin mining business that Celsius controlled. All of those assets are being consolidated into a new company that will then offer the customers of Celsius an opportunity to participate in. And that's the process that we're heading down a path towards. And we've set a timeline. That actually there's a timeline now that's on the record that you can, again, go to that docket and read about. And so the hope is to emerge from a bankruptcy proceeding, sometime over the summer. Don't risk all your investments. It should be an appropriate, for each individual investor, an appropriate, place in your portfolio. And I think the lesson learned for everyone, and this is something that the general financial service community has spoken to, whether you believe in digital assets or not, appropriately weight in your portfolio an allocation to an asset class that comes with risk. And so the lesson learned should be, if you want to participate in the space, make sure you do it with the appropriate level of assets, because I don't think it's going away. And that should be a good lesson for people as we embark into the future. Celsius customers who deposited their digital assets on their platform in a pure custody account, and the effort of Celsius to get that custody asset back to those customers. And that's a process that was reported on yesterday. I would note that less than half, I believe as of yesterday, had completed the necessary KYC information and other information to get their coin back. So if there are listeners on your show right now who are Celsius custody customers and want their digital asset back, go complete the information and get it back, because it's available to you. And since many in the community have been expressing a strong desire to get their coin back, that's been kind of a message that at least I've heard as a director here. We're trying to give it back to you, and people aren't just complying with the pretty basic rules to get it back. So I'm sort of fascinated with that. But maybe your fast-growing subscriber base will capture some of those customers, and they'll complete the information necessary. But it's all available to you on this docket, and the hearing was recorded yesterday. They should listen to it. I'm an optimist, and I'm always believing, even after what happened in 2022, that the markets are going to go up. And it's just a matter of time frame. That I'm a long-term investor, and so long-term, I believe markets are going to equity markets are going to continue to go up. The challenge has been, and let's just talk about the last 2 days. The last 2 days, your brethren in the financial media have devoted significant airtime to testimony by Jerome Powell. And people are harking on every single word this gentleman speaks, as if there's going to be some magical piece of information that will help guide them through this environment, whether it's in equities or fixed income securities. And I just think folks are paying way too much weight to that kind of conversation. It's really about individual companies and how they continue to grow their businesses, and for us, how they deal with technological change. We're very focused on innovation and avoiding disruption. And that's, to me, a much more important long-term phenomenon than what Jerome Powell's trying to do with the Fed to wage his battle against inflation, and at the same time not causing harm or a recession to the rest of the economy. But we're going to lose that battle every day, because that's what people want to focus on. So as long as they're focusing on that, the answer to your question is, who knows, right? Who knows what the market's going to do, because it's so much weight is being paid to what their policies are going to transform themselves into. Are they going to raise 25 basis points, 50 basis points? How many more times are they going to raise it? Are we going to get to a 6% cap? Is he going to try and spike rates up because he's going to need more ammunition to bring rates back down when the economy slows down? So it's not something that we pay as much attention to. Obviously, we're listening to, but we're really focused on company earnings. Are they growing their businesses? How are they addressing technological change and avoiding disruption? And individually selecting through our model those securities that you should not own. We are flipping the investment paradigm, and that's the way we spend our day and our time. And I think that's a good way to both diversify and
we have like long-term, and those long-term secular trends are